So Andrew, as the old saying goes, and we've all heard this before, there are only two guarantees in life, and that is death and taxes. Unfortunately, your retirement savings are beholden to the same exact rules, but thankfully, with just a little bit of education, you can actually do yourself and your retirement savings a huge favor just by minimizing the tax bite that the IRS is waiting to take out of your retirement savings. And in this short educational video today, we're going to talk about how you can save some money on taxes when it comes to taking money out of your 401k. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And our goal for making these educational videos is to make the difficult and stressful process of retirement income planning simple.
Yes, and we do this, of course, by incorporating our team of expert advisors ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a written retirement plan that's going to help our clients understand when, where, and how to take money from their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notifications bell to be notified when we upload new videos.
So, Andrew, if you have a traditional 401k and you are looking to take money out of that particular plan, you will have to pay taxes on that distribution at your ordinary income tax bracket. And if you're under the age of 59 and a half, you may even have to pay an early withdrawal penalty of 10%, which could easily push you into a higher tax bracket, the highest of 37%. But just with proper planning, you can minimize the taxes that you have to pay on that 401k withdrawal. And we're going to talk about that in our short educational video today. But before we get into all of that, there are two rules that we must give you to retirement income planning. And what are those two rules, Andrea?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
So let's talk about how we can help you minimize the taxes that you may have to pay when it comes to taking money out of your 401k plan. So let's talk about how we can help you minimize taxes on your 401k withdrawals. First of all, you're going to want to start your distributions early. This is going to be very important to you. You want to start it after the age of 59 and a half to, of course, avoid a 10% early withdrawal penalty. So if you start early, you can stretch those payments out for a longer period of time. Also, when you take money out of your 401k, it will be very wise for you to try to stay in the same tax bracket. So for instance, if you're in the 22% tax bracket, you don't want to take any more money out of that 401k that will push you into a higher tax bracket, like a 24% tax bracket per se. Also, it will be smart to spread those taxes out because you're going to have to take those taxes at age 72, which is known as your required minimum distributions. And of course, if you have taken those taxes out over a period of time, it could prevent that IRA from being so large and having to give you a required minimum distribution that's going to give you an increase in your taxes at that time. That's why we recommend start early, stay in the same tax bracket, but spread these taxes out to age 72. It may prevent you from having a large tax hike in the future.
So in your first point, what you're saying is that we can pay less taxes now rather than paying more taxes later, right?
Absolutely, Andrew. So as long as you only take out an amount that will not push you into a higher tax bracket. So if you can do that and take a little bit of taxes over time, when you get to the age of 72, when you are actually required to take your RMDs or required minimum distributions, you may have a less tax burden at that particular time. So let's go into our next topic in helping you reduce taxes on your 401k. So one of the things that you may not realize is that you might need to keep working in order to make sure that you can pay less taxes on the back end. So one of the things that you also may want to consider in order to help you lower taxes on your 401k withdrawals or minimize the taxes on those 401k distributions is that you want to keep working. I know this may be a novel concept, but many people are starting to understand that by working, you can avoid taking money out of those 401ks, even if you're at the age of 72. So understand there are no required minimum distributions from your 401k at your current employer. Now, the rules are a bit different if you own more than 5% of the company that owns your retirement plan. So you're going to want to make sure that you understand those rules. We're not going to talk about that in this video. One other thing to understand is that if you have any old 401ks, they are not exempt from taking the required minimum distributions at age 72. So you might want to consider rolling those accounts into your current 401k if that plan will allow it, in order for you to continue to allow those accounts to enjoy growing tax deferred.
Okay, so from your second topic, what I gather is that no RMDs will be taken from your 401k as long as you're still working with your current employer, right?
Absolutely, Andrew. So there will be no required minimum distributions from your 401k from your current retirement plan as long as you remain working at that company. So that may be something that people think about doing, or an extra incentive for people who don't want to quit working right now to continue working, because they won't have to start taking those required minimum distributions until they actually retire. So Andrea, now let's talk about something that a lot of people do, millions of Americans do, and that's borrowing from their 401k. So another concept that millions of Americans know about is borrowing from your 401k. So you can definitely borrow from your 401k instead of taking a distribution from it. And there's great advantages to doing that. Let's talk about that. So one, of course, you don't have to pay any taxes because that is a loan. It's not considered income to you. It's considered a loan, so you pay no taxes. Also, even if you're under the age of 59 and a half, you don't have to worry about that 10% penalty for taking that money out early. And another thing that a lot of people kind of have some misinformation about is the interest that you pay back on that 401k. You're really paying yourself back. So it's really literally like you're taking money out of one pocket and putting it into the other. So you're not paying some interest back like you're doing on a credit card. You're paying yourself back that interest. Also, you can create an investment advantage for yourself. So let's talk about this. Let's say you have a loan repayment of, let's say, $600 a month for 5 years. And you're looking at maybe an alternative investment plan that you want to get into. So you took out this loan. It's going to, you're going to have to pay it back in 5 years at $600 a month. Maybe you have an alternative investment in mind that you want to invest in. Maybe it could be real estate or any other investment that you find suitable for you. This is just an example. And let's just say that investment is going to net you $800 a month. You figured out it's going to net you $800 a month. Well, that $800 minus the $600 that you're paying back will leave you with $200 of income for profit. And guess what? After 5 years, that money of $800 will all be yours. And this is just an example of what some people can do when they're actually borrowing money from their 401k and also help them save taxes and create an investment advantage for themselves as well.
So with the next point you just made, what you're saying is that if we take a loan from our 401k, we would have no taxes and no penalties.
Yes, absolutely. You would have no taxes and no penalties on that money. Okay. Plus, Andrea, I want to make a strong point about this. You can also use that money for even better investment opportunities as well. So let's talk about one of the most overlooked things that you might could do to help you save taxes on your IRA distributions. Maybe you can give it away. So let's talk about that. So the last thing that I want to talk about when it comes to minimizing or saving yourself a large amount of taxes on your 401k or IRA required minimum distributions is that you could actually donate your IRA to charity. Yes, you can do this. So this is called a qualified charitable distribution, or better known as QCDs. If you don't know about this, this is very unique. A lot of wealthy people do this. But you can actually donate your IRA assets at the age of 70 and a half or older to a qualified charity. The maximum amount of income that you can actually, or the maximum amount of dollars you can put into a QCD is $100,000, or it can actually be up to $200,000 if you're married filing jointly. And this money that you put towards that charity will not be included in your taxable income at all. So you completely have eliminated this money from your taxable income. Also, qualified charitable distributions are not limited to the RMD amount that you owe, or that you have to take. So for instance, you have to take $25,000 out of your IRA. You can still contribute up to $100,000 for that charity. You can still do that and have that as a complete income write-off for yourself. So you don't have to take out the amount that is owed from that particular IRA. So it's a very smart play. Another thing that you want to look at too is that you want to transfer this money directly to that qualified charity organization. You don't want to take the money and then try to write a check to that organization, because that money at that time will be disqualified. So I hope that this information was extremely beneficial to those of you who are tuning in. Please be sure to leave any questions or comments in the section below. And don't forget to subscribe to our channel.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.